good day, all. Ira Epstein, and here we are with your evening wrap-up of your stock spider ETF market and earnings day. And I'll tell you, there's one stock you'll just hear about, and it's Meta. Meta's up about 15% in the aftermarket. They're going to declare their first dividend ever. They've become highly profitable again, and they have really mastered, if you will, the AI part. They're still losing their shirt on the metaverse universe, and they're going to keep doing that, they said, because they believe that's the next it down the road. But right now, they're going to continue to lose money on that. They realize they're going to lose money on it, but Zuckerberg thinks it's very important to the stock, and I'm not going to argue with him. He's brought this company back in a year from something that people were exceptionally disappointed about to being one of the stellar performers. Apple reported today after the close, and disappointing. China sales not doing what they want. And again, the question is, were they going to be able to do anything? And these rulings against its Apple Store don't help them in any manner. That's to show up yet. But now that they have to open this up via the courts, to allowing other apps in a certain way, what's that do to their business model? So a bit of pain that they have to get through and figure out where to go. DocuSign is aggressively seeking, talking with investment bankers. They want to come out. They want to do their IPO. The valuation looks as though they're trying for $13 billion or so. So that's a huge number, but a good company. We'll see what happens. And I happen to have a family member that works for them. So I'm sure he's happy. He's vested in stock. A young kid, by the way, not nowhere near my age or anything like that. And he was asking, what do I think? I said, great company. I think it's a good future. So NVIDIA up $15 today. Tesla came back a little bit. I don't blame it. They moved that out of Delaware and get away from the rules that they're hitting you with, Mr. Musk. If you take away his $55 billion a year that he will get or should be getting under an agreed upon deal, and they don't want to do it, they come up with a legalese way to avoid it, he may not be the richest man in the world. Neither was Bill Gates for a while. He's still doing pretty good. TLT, look at how that's up. Zoom, still up very good. Netflix gains back. You wouldn't know yesterday was a down day. I feel like an amateur in the market, to be honest with you. Yesterday got stopped out of a number of the shares that I recommend. So was one of my worst trading days recently, okay? And, that's what's wrong with everybody on TV. They never tell you when they're wrong. I think what I should have done in looking at it is just said, I don't want to go through the FOMC meeting because it's a no-win proposition. What do I mean by that? The market widely knew that Powell was going to say he's doing nothing. I believe that. Yet the market believed we're still going to get, however they're doing it, an interest rate move in March. Now, the big boys, the big banks today, started moving away from that position. Finally, I was reading it in Bloomberg as to how the big boys are now calibrating their bets going out to the meetings after that, and I think that makes sense. However, what if tomorrow the jobs numbers are a surprise? Which brings me, let's look at the data if we could. You get the January non-farms payroll data at 7:30. The market's looking for 185,000 new jobs, which is under the 216,000 we had the month before, December. It's looking for unemployment to increase to 3.8. Just what if? Just crazy. Comes in 160, 170,000. Then people will instantly say, uh-oh, the market's tipping. We need the Fed to do something. It's going to tip too fast. It's going in the wrong direction. Conversely, what if you go up again towards the 216 figure or higher? Then the people will say, oh boy, we can't even think of March. Maybe we're too soon and whatever. Tomorrow's an important day, and it's important because we're just coming off a fresh Fed meeting, and this is the report waiting for it. And then we have one more of these before the next meeting in March. So this is an important meeting. We get factory order data for December. That's going to come out. They're looking for up 0.2, well under what was reported the month before. And the University of Michigan final consumer sentiment shouldn't have any impact on the market. They're looking for a 79 versus the 78.8 prelim. Okay. So as I said, It was an interesting day and very green if you look behind me. You would not know the market reacted in a negative way the day before. It's as though it just shook it off. I expect Boeing's going to chop around here for a bit and we'll be dumping that. Maybe we'll go to Meta. Who knows? We'll figure out something we'll look at. In fact, why don't you do me a favor? Tonight, write me the different stocks that I should do for the lead one. I just want one from you. Do not make it something obscure. We have lots of viewers, something that they look at, but ideally something I haven't covered recently. That would be a fun thing. Give it to me, and I certainly will consider it because I want to put up another different one, especially for the weekly charts. All right. So Boeing, I think that you're forming an attempt at a bottom in the market right here. The market now has a pattern of higher lows, higher highs. That's the reason I think it's happening. The market's fighting a battle where I told you. Do you remember yesterday what I said? This is the market yesterday. I said, I wouldn't be surprised if it comes up, but it's got 3 levels of resistance. Won't be easy to get around over right off the bat. The 18-day, the green to 100, and the 200-day average of closes. Do you think it went there and they listened to what I was saying? I think so. This is your battleground is the issue. The Bollinger Bands are now flattening out. Instead of pointing down, they have flattened out, and they will try coming up. And what's happening probably is the market has had a big break. Volatility should come out of the market, and it should start consolidating. This is often the prelude to it when it wraps its arms around it. When we look at the market here, giving you a pop to the upside, absolutely happened in the momentum. So I can say that the market's out of the downtrend, but I don't say it's begun an uptrend. In uranium, right back for the highs. So we talked, and this is something to always learn from. Here is a market gets over the Bollinger Band, and you set up lower highs, and you start working your way down. Finally, you get a higher one, but you fall right back to the 18-day average. This is a bear move in a market that has bullish bias. Why bullish? Because it had been staying over the 18-day average. And now in 4 to 5 days, it comes right on up and goes for the highs. Hard to catch, but something you knew that once you lost this part here and you were correcting, the 18-day average was a likely target on the market. Now we come over to the gasoline fund. And we have a lot of gasoline. If you've been watching the EIA, the API numbers, there's a lot out there. You can see what the market's done. Again, learn. The first challenge of a 100-day average, green, and the gray is the 200 and a Bollinger Band. It's often a key resistance area. And I know what you're going to tell me. But Ira, it got over it, and it's running up there, and it's embedded. And I know. But I'd always tell you, the first challenge, don't trust it. It has a way of coming to bite you. And boom, it did. So now, are we trending? We are not. We're just not in an uptrend anymore. XLF, you're reaching down and trying to get now, and you did it under this 38.27. You got under that with 38.25, and you're on the verge of losing the bullish embedded reading. I would expect you're going to lose it 1, 2, 3 in the morning. Any close under 79 does it, and the objective is then going to be 38.11 to figure out what to do next. In the industrial sector, again, I feel like I don't know what I'm talking about. It keeps coming back for the highs, and yet every industrial report you read from every region is weak. This market doesn't care. It's just into another world. I don't fight it. When you're over the 18-day average, the only signal I have is to be bullish. Why? The bias is up, but you're also overbought. Just don't see anything there. AMC, am I correct that we're basing or trying to at $4? So far, I'm very much on the money. But you have an embedded reading. I will know that I've got something by the tail when you lose the embedded reading and it closes over 21. Until that occurs, you can get another, let's dump this stock and get to 369, the lower Bollinger Band. You're not in a trend. You have a higher high and lower low, but the bias is down, and this rules the day. Until you lose that bearish momentum, the surprises that show are often then with that momentum it'd be down. Consumer sentiment, just powerful. Overbought into the top band, you're churning in the sideways action here. No change on that. Churning in the home builders. Just yesterday, I know I told you, I said, I wouldn't get overly bearish on this market in any manner. And now suddenly I'm bullish again. Yeah, it happened that fast. You've got higher lows, higher highs. I have to temper it. And tempering is because you're really going sideways in the Bollinger Bands. And if you buy it for the breakout, you'll probably find that you're like a bride that goes to the altar and the groom doesn't show, or the groom shows up and the bride doesn't show. You're going to be disappointed there one way or the other. That's what often happens. Eventually you break out of that sideways action. That's the hardest part. The weekly charts are the way to trade this market, not off the daily. Does that help you? We'll talk about that over the weekend. In XLE, higher high, lower low in an overbought market. You can see where the resistance is, the 200-day average. The bias is up, but you're not trending in the market. In GLD, don't fall for that it's over the band and going to do something. Here's what's going to happen. Eventually, the sideways action is going to get resolved. The bias is up. You're over the band. I never tell traders to buy over a Bollinger Band. And one of these days, this market's going to catch up here and take off, and then we'll start buying on pullbacks. It's acting like a market that is through on the downside. I don't know that it's ready for the upside. Silver market, you're fighting key number here at the 100-day average with support at the 18. It has bullish bias. The trend is up. The market is knocking on the door of being overbought. It's got a 70 reading already. So you've got all these layers of resistance in the market, but it's not acting like a bear market either. Then copper. Well, the copper market's fighting its battle at the 200-day average in the gray, right to the 18. China's throwing everything it's got, trying to pick up the housing market. Remember, they've cut the reserve ratio. They've told banks to lend money again in the housing market. Even with Evergrande being declared to go and sell off its assets in Hong Kong, the law is allowing, however it does it, I don't know, parts of units to operate on the mainland and get units ready to keep going, getting sold and delivered to buyers. I don't understand how it works there, but I don't have to. All I have to do is tell you the news. And this market is not acting bearish with all that. I'm impressed. Is it overbought? Yeah. Is it a buy? Not in my world. But it's acting more bullish than it is bearish. BND, well, if the government's getting ready, our government, well, I guess they're not the government, they're the Federal Reserve, and they're not a branch of government. So when I look at them and I go, you know something? We got two elements that are helpful right now. What are they? The Treasury isn't auctioning off as much debt as they thought they had to. And we have a Federal Reserve that is now wondering, are they going too fast on the runoff of the balance sheet? They're going to discuss it. That's what the Fed chair said yesterday. And while they're pushing back that they don't want to have a rate cut in March, they think it's too soon, and I do too at this point. A crazy jobs data report tomorrow could alter the landscape. Crazy being one that shows job growth falls apart. 185,000 isn't that number to me. 160s, you're going to scare the market. That could get them thinking about that. Then the dollar. Well, if interest rates are going to fall, where's the bid for the dollar? I think it disappears. I'm looking to see if you can get a close under 27.65. You lost the bullish embedded reading today. All you need is a close under that, and my work turns bearish, targeting the 27.35 lower Bollinger Band. At the same time, if that happens, I'll be looking to see, can you get up and over 155 in the euro, a market that might be ready to pop to the upside. Tomorrow's report on jobs could be a trigger for all that. So you put it together, you got to have a game plan, and I have one for you. I don't know if you know all the different things we offer, but there's a mess of them. And we've created a page that's got a shopping cart on it. You go there, you click on the blue, this will be up automatically. And when you do, everything's active. Now, by the way, while I talk here, if you move your cursor to the top of the page, there'll be a link that can take you to this page. Otherwise, it's IraEpstein.com. These are all the offerings. As you click each one, what happens is it'll go into your shopping cart. You'll put in your name, your email, and your information. You'll hit send on the bottom. It comes to us. We fulfill it. We send you an email back. It's not automated. We'll do it as soon as our staff comes in. They pick out all these things and they get it sent right to you, and away you go. So it'll take the next business day and we will get this. But there's just so much to choose from. Try our charting software. I get so many people to tell me the ones they're using, and ours is, in my opinion, one of the best ones out there. You want the research. I don't care if you're trading stock indices, futures, or if you're trading the spiders. The same information applies, okay? One's based on the other. Gold's a classic case of it. You know there's a new futures contract coming. The S&P 500, non-weighted. So everything has the same value instead of weighting them with different parts the way that they do currently, and that's the typical way to do it. I think this is going to be a successful contract. I think people are going to look at this in a very unique way, and if I'm right, it could catch on. But we'll see. Let it get some open interest and volume, but it's right here. The exchange is going to release it very shortly now. I'm Ira Epstein. Remember to move your cursor up here, take advantage, and I'll catch up with you tomorrow. Take care.